Let's first look at the investment condos in Toronto. Is it dead? I took a liking to a few areas of the city where I think a lot of single people live, and that's Yonge and Eglinton, which is young and eligible, Liberty Village, and the Distillery District. And for the most part, a one-bedroom condo in that marketplace runs you about 600 grand, okay? And from an investment perspective, I wanted to break it down to see what is the actual return to an investor in today's marketplace. Now, the first thing I did was I estimated what an actual property would cost to buy for an investor. And I came to the conclusion that a good, reasonable property for one bedroom is about 600 grand. When you factor in the land transfer tax and closing costs, we're going to round it up to $625,000. Now, if someone actually paid cash for that condo, they'd have to lay out $625,000 and they can now earn a return. And the numbers are not as attractive as one would think when you're paying this thing in cash. So let me throw out some numbers to you. When you factor in what normalized rents are for the area, I landed at about $2,200 a month. Average condo fees for these condos run you $400 to $600 a month. I use $500 a month for this example. $2,000 in property taxes, as well as condo insurance, which could run you about $50 a month. When you factor all those costs in, the rate of return on your investment drops to under 3%. Anybody who's looking for an ROI on 625 grand and only getting less than 3% is better off putting their money in a GIC. It doesn't play out. The numbers don't make sense. Now, when you factor in a 25% down payment or a 50% down payment, the numbers are even worse because you're looking at almost negative cash flow in both situations, and the ROI on the money you put out is negligible. It's not even something worth considering. You're better off getting a GIC and parking your money there because it just doesn't make sense. Now, folks do say, well, Vince, hold on a minute. There is appreciation. Yeah, there is appreciation. But unfortunately, the city of Toronto has a glut of one-bedroom condos. And I think it's to the detriment of future values of these things. They don't pencil out, folks. It is a lost, just a mess, an absolute mess. No one goes into investing to lose money. They want a return. And the reality is these type of properties aren't working for investors anymore. So one of the things we're talking to people about that are looking at investment is to stay away from condos. They just don't pencil out, they don't make sense. And having to outlay that type of money, and when you factor in mortgage payments, you're looking at just a negative number. Like we're talking negative 5% return on your money. And that's with 25% down. With 50% down, you're almost break even, you're making zero. And when you factor in principal component, cash flow wise, you're always negative. It's just not gonna work. So folks, I believe the market's dead. And the stats and the sales statistics are showing that. MLS is reporting condo sales are at an all-time low. And I don't really think these one-bedroom condos have the best floor plans because they're basically, as a colleague of mine in the space, Ron Butler, points out, they're crates, dog crates in the air. They're just too small. No one could raise families. No one sees a future in them as buyers. And I know builders are not going to like this video because I'm picking on their product, but I just don't think they're very attractive. You know, going back to the 2000s, all these units are about 35% smaller. And people just can't adapt to that small a space for a long time. Some could, but for the most part, they're temporary homes for folks, and there's going to be just a lot of nomadic activity in them, which doesn't bode well long term. So If you're an investor and you're thinking of buying a condo, I'm probably going to recommend stay away from them.